bounce, and then we have another big wave down into late next year, early 2024. This will be what I've been saying, the crash of our lifetime. It won't be quite 29 to 32, but it'll be more like 29 to 32 than it was 74 to 75 or 2000 to 2002. And it'll be like, I call it 2008 downturn and recession times 1.5. That's my rule. This is going to be 50% worse. Stock's going to go down 86% instead of 57, and on and on and on. We're going to get 15% unemployment instead of 10 or 11. So that's what look at. Whatever you thought 2008 and 9 was for your business or investments, this should be about 50% worse, which means get out of the way. Well, Dan, I've been warning about this for a long time. The baby boom peaked in their entire spending cycle back in 2007. And so we had the great crash and recession of 2008 into 2009. And the central banks just went haywire. I mean, they just started printing tons of money. They didn't let that recession do its work, okay, and work out the excesses and the zombie companies and the bad debts. So we're carrying all this into the future with endless stimulus, and then COVID hits and they go haywire even more. $10 trillion, Dan, fiscal and monetary combined, about half and half. $10 trillion in 2 years to stimulate an economy just because of COVID, which is a short-term challenge anyway. So now they have to tighten now. And what people don't realize, they've been keeping this economy going now for 13 years purely on stimulus. Because the baby boomers are done, and the millennials, which I project very clearly in the future, a boom for like maybe late 2024 to 37. Okay, but in between we've got this weak fundamental economy driven by stimulus, and now they've gone so far they have to tighten and work against themselves. And I think this tightening is not going to be taken well by the economy. And by early next year, we're going to see another wave of stocks down, just like we saw or more. I call it the first wave crash. We're in that rebound, and we're just coming into the third wave now. We're just making new lows and a lot of stuff, but that's a bad sign. I think we have another big wave down into late this year, early next year, bounce, and then we have another big wave down into late next year, early 2024. This will be what I've been saying, the crash of our lifetime. It won't be quite 29 to 32, but it'll be more like 29 to 32 than it was 74 to 75 or 2000 to 2002. And it'll be like, I call it 2008 downturn and recession times 1.5. That's my rule. This is going to be 50% worse. Stock's going to go down 86% instead of 57, and on and on and on. We're going to get 15% unemployment instead of 10 or 11. So that's what look at. Whatever you thought 2008 and 9 was for your business or investments, this should be about 50% worse, which means get out of the way, especially in investments. Major bull or bear market, in other words, the direction you're going. And now we're in a bear market from my point of view. So the waves ought to be 5 waves up in a bull market as we saw 87, 2000, 2007, that sort of thing, 2021. Now we're in a 5-wave sequence down. We saw the first wave bottom in June, okay? We've bounced since then, and now we're coming out of that bounce. We're in the third wave from my point of view, just breaking below the first wave in the NASDAQ and most of the major indices in the S&P. And this third wave should be at least as strong as the first one, and it should be stronger. It's likely to be 50 to 60% worse. So we could see the worst of this downturn into early next year. It took 5.5 months, that first wave, so it's probably going to take that or more for this one. First wave took down the NASDAQ 34%. This will probably take it down, after a bounce down 55 to 60. Now that Dan is when people are going to know, this is no longer a correction. The central banks actually lost control. See, all I've been waiting on, Dan, for years is the central banks to lose control, because all they've been doing is printing money. You don't solve any real problems with short-term cures, like just printing money out of thin air. You have to restructure, you got to cut back debts, you have to do real things businesses would do in a turnaround, same with the economy. So this has just been Pollyanna, and now it gets to the point where they overdid it. I think they have lost control. There's no way for the Fed. They can't turn around now and loosen aggressively after finally admit they have to tighten, and after they responded. They're stuck around quickly, and I think by time they do turn around, this crash is going to go down enough that people will say, no, we thought that the central banks could control this. We thought the economy keep going up. People are going to get scared, and then you can't turn them around. in a downturn, everything, what we have to see, there is nothing, including the magical gold, that did not bubble. In fact, gold at the peak of its bubble not too long ago went up more than stocks did. So people saying buy gold is the same. That's one of the biggest bubbles, okay? So everything, financial assets have to reset. And then I'll give you the most important number in the world, Dan. $577 trillion going on, probably closer to 600 by now. That's all the financial assets in the world. And that normally is 2, at most 3 times GDP. It's like 6.5 times global GDP at 94 trillion. So this is a global bubble in everything. So bonds with any risk have to come down. Stocks anywhere in the world have to come down. Hey, they may down 50% in Australia with better demographics, and 86% here, and 92% in the tech stocks. That's my forecasting. Australian stock market, where I'm going next couple of weeks to lecture, down 59%, which will be the worst they've seen in decades, but it'll be better than almost anybody else. Real estate, it already went down 34%. We didn't even see that in the Great Depression because we didn't have a real estate bubble in roaring 20s. You couldn't borrow money easy enough to have a bubble in real estate. That was crazy. Now we do have a global everything real estate everywhere. So I'm seeing real estate going down, what did I say, 1.5, 50% instead of 34%. Now that is painful. It's one thing stocks go down, stocks can bounce back pretty quickly, and most people don't have most of their net worth in stock. Most people do have the majority or a big part of their net worth in their home.
All real estate.
Have vacation homes, and a lot of people have been speculating on real estate. This real estate crash, if it's 50%, and that's just going back to the 2012 lows. Let's not go that far in history. We're not going back to 82 or 90 recession or anything. Just down to recent lows. We came out of 2008-9, but real estate took much longer to turn around. We didn't come out of real estate till 2012. We're going to just go back to those lows. That's 50%. That's how big a real estate bubble. Real estate doubled since then. So that's going to be the most painful thing for most people. Their house goes down, and this time it doesn't go roaring back up to new highs. Your market's going to go down 50 to 59%. That's going to look very good. The UK and European market's going to go down more like ours. Maybe not quite as much. We had a bigger stock bubble than anybody, but real estate bubbled everywhere. Australia and New Zealand have an unbelievable real estate bubble, and the number one real estate bubble in the world is China. China's stock market, okay, yeah. But everybody owns homes. Poor people own sometimes 2 or 3 homes, and 1 or 2 of them sitting empty in China. So China is going to get hit the hardest by this. Australia by being next to them. The whole world's baby boom is turning down, except for Australia, New Zealand, and Norway and Sweden, a few small countries. So this is a back to reality now that the baby boom and all the stimulus has gone as far. We go back down to reality, and that just means stocks go back down to early 2009 lows, real estate 2011, 2012 lows. And people say, oh, that's no big deal. No. 92% in the NASDAQ and 50% in average real estate, 60 to 70% in upscale ritzy real estate. So this is going to be the biggest shock we have seen in our lifetime. Again, more like the early 30s, maybe not quite extreme. That was just a naked crash. They didn't do anything to stop it. No stimulus, anything, no cushioning. And it'll be the biggest. Our kids will not see a crash this big, I think, even when they grow up and they're in their 40s.
Let's hope not.